Should we buy or sell Monster Beverage? First off, read this disclaimer carefully. Monster Beverage is in a theme that I call Hated Industries. The reason for this name is that these are companies that always have some persistent PR issue. In terms of Monster Beverage, their products, caffeinated soft drinks, there's every now and then you have stories in the news about people who drank too much. Okay, so that's something that is just simply characteristic of those stocks in this theme. The average performance here from the 52-week low is strong, but they are technically in a bear market. Monster Beverage is 6.9% from the 52-week low and 13% away from the highs. Here is the company's website. It's pretty strange, looking at this banner, or hero as it's called. It's very odd to see this massive amounts of text. Really strange marketing here. Yeah, okay. Here is the chart. So this is weekly data points, big picture, and it's been on a very substantial rally. It's gone from being a very small company to now being very big. So the behavior of the stock has changed. At these lows down here, this is where you have those very big moves up and down, and as it goes up, you start to see it behaving more like quote unquote normal stock, where there are rallies, there are pullbacks, but the percentage moves are way smaller than we saw when it was a small cap. So what is very interesting now about the current price action is that if we draw that in, this price action here, it could be something very parallel to what we saw back here. And so let's do a bit of a comparison here, okay? So during this first, the major pattern, you saw like one rally, and you saw, 2 and 3. And it could be that the parallel here is 1, 2, and 3. And in this, the previous instance, we went back here to test the blue 100-week moving average 1, 2 times, 1 and a 2. So there are substantial similarities here between these two major patterns. What is especially interesting in terms of what happened the previous time is that after that second test of the blue 100-week moving average, we did get a pretty substantial rally. Maybe we are going to get something similar. At least I think you can see it yourself. There is something going on here in terms of patterns that repeat themselves. So yeah, that would be a thesis here. Okay, so we have support at the blue 100-week moving average, and that in and of itself is interesting, given that that moving average has offered support, as we saw here in the past, and also recently as well. If we look at this rally here. So obviously this is a support level that has legitimacy. Let's jump into the daily data points. So in terms of the daily data points, it's a bit noisy. You could certainly make the case, and it's a decently strong case, that this looks like a rounding top pattern. So that is a bearish pattern. The thing about rounding tops is that they are characterized by rallies and pullbacks and rallies and pullbacks. So a rounding top can actually be profitable for a bull as long as the bull very systematically buys at the pullbacks and simply just participate in the rally. So I think that the risk reward here is just interesting from a bullish standpoint. You could have a rally that is a part of forming a major rounding top, or you could get a rally that is part of forming that is part of a very key low until we make a new all-time high, similar to what we saw back here. So yeah, if you look at the other indicators like RSI and the likes, nothing really in particular happening at this point. You could certainly make the case that RSI is at a level that many times at least has triggered mean reversions to the upside. Looking at the daily data points, PPOs, and also the RSI. RSI is a bit in the neutral zone. The PPO, it is also it is towards the lower end though of the spectrum. But we need more data to make a decision. Then we go to the seasonality. Over the last 5 years, February and March are weak. February is not really that dramatic, but March is very weak. But that is only 5 years. When we go to 10 years, then we do see that February is 50-50. But on average, there is a 2.4% gain. So yeah, it is a more bullish than bearish month. March is still the second weakest month. But April, May, June, and July are strong. Then we look at the last 20 years. Then it is, the seasonality is very interesting because you can see here that the coming months are very, very strong, 60%, 63% across the board. And when we look at the average gains, they are meaningful. So this is not really a favorable time for the bears. There's very few short sellers that will look at this seasonality and become very enthusiastic about shorting Monster Beverage. Here we have Finviz. There's no trend line in play at the moment. You can see here that year to date it is down 10%. This is a very liquid stock, so options are definitively available. So there's enormous opportunities for those who want to be a bit fancy. So number 3 score here from Sachs, C value and C growth and B momentum. And it is rare to both have a good value and a growth score. They usually are a bit inverse each other. Industry rank, bottom 32%, beverage, soft drinks, no dividend, and $46 billion in market cap. When we look at insider activity, then we do see that the insiders have bought, and then we did have some selling here, but this is in August. So the insiders have been buying. If we look here at the consensus estimates, then we do see that there are 22 analysts covering the stock with an average price target that is 20% above the stock price. Highest is 37% above, and the lowest is 7.5% below the current price. When we look at the correlations, long term 90% with the S&P, 78% with the PBJ, which is the food and beverage ETF, and there's an 83% correlation with Starbucks, and minus 83% negative with the dollar index, short term. We have a mere 2% with the SPY, which is almost no correlation at all. Minus 7% with the PBJ and 52% with Starbucks. And then in terms of the dollar index, minus 40%. So looking short term and long term in terms of correlations, it seems like Monster Beverage and Starbucks, they do affect each other. So let's just quickly look at what's happening with Starbucks, since it could have an effect on Monster Beverage, because both produce caffeinated drinks. So if you want a bit of a boost, then you could have some coffee, or you could maybe have a Monster Beverage. Okay, so here is Starbucks their chart. So Starbucks has also seen a pullback. Pullback seems to be a bit more substantial than what we saw with Monster Beverage. Starbucks is actually below the 100-week moving average. So in this case, we see that pretty important moving average is now resistance. So it is a level where the bears are likely to put on shorts. So it literally is the opposite of what we have here with Monster Beverage, where that moving average has now been support 2 times and we have bounced. So that is actually interesting. Some of the more fancy investors would maybe even consider putting on a pairs trade. So a pairs trade, that would be going along like bullish Monster Beverage based on support and also the other stuff we have talked about. And then to go short, alternatively, Starbucks based on resistance. Yeah, but the pairs trading is that's a topic all unto itself. But it's a very interesting thing. Okay, but to sum up my take here for Monster Beverage, the technicals are certainly way more bullish than bearish. I think that the major pattern that I drew out, with the yellow highlighter that we saw, the current pattern is extremely similar to what we have seen before. We have to, of course, be careful when jumping to conclusions based on just pattern recognition. But if, that pattern that happened before and that is very similar to what happens now, if there's some deeper mathematical reason why it is manifesting itself again, then it is very interesting, given that the expectation then would be that we'll see a significant rally. You also have just pure psychology as well. It's a self-reinforcing feedback loop where people look at previous behavior of a stock and then behave in the present based on what happened in the past, and then you can get that self-reinforcing effect. I think that fundamentals, they had a bullish lean to them, and the seasonality, especially when you look for long term, the last 20 years, the seasonality is very strong. So yeah, there's way more reasons here to be bullish than bearish, and there's a very clear level in terms of a stop, and that would be like the blue 100-week moving average.